Another one bites the dust. Republic First Bank has failed. Not First Republic Bank, we already knew about that one. That bank failure happened last year. Republic First Bank is a different bank, a much smaller bank that was located up in the northeastern region of the United States, but they are no longer. On Friday, we got news that they have been shut down. I've been talking about all the risks that I see in the banking system for a while now in my past videos. And although this is a smaller bank failure, it's definitely something that I want to get into briefly and break down. So that's what we're going to do today. Before I do get into the video, please make sure to like the video and also subscribe to the YouTube. Really appreciate your support. We got a bit of a new setup in here today. It's pretty similar, but we got Mac Miller back up on the wall. The elephant is out. Wasn't feeling the elephant. And we got some new lighting in here, which I'm super stoked about. But enough about that. Let's get into the important stuff. So, Republic First Bank, a much smaller bank, had $6 billion worth of assets and $4 billion worth of deposits. To put that in perspective, a much larger bank like Wells Fargo has $1.73 trillion in assets under management and $1.44 trillion worth of deposits. So these guys were a very small fish in a huge pond. And I don't think this is the type of bank failure that's going to lead to a systemic banking crisis. Now, if a bank like Wells Fargo or Bank of America were to go down, I would think differently. I think that would lead to a systemic banking crisis. And a lot of these banks are really dealing with the same issues, which is that they made bad investments, which I'll get into in a minute. So there were 32 branches in New Jersey, Pennsylvania, and New York for Republic First Bank, and they were sold. First Republic First Bank was sold to Fulton Bank, who is another bank up in that region. So similarly to when First Republic Bank failed last year and JP Morgan Chase came in and bought them out and took over their branches, that's what's going to happen with Republic First Bank. Fulton's going to come in and take over those branches up in that region. The estimated cost of this failure for the FDIC is $667 million. And that's just the estimated cost. It might be more, right? They might be lowballing it a little bit. And the balance in the FDIC Deposit Insurance Fund as of December 31st of last year is $121.8 billion. So this isn't really going to make a significant impact on that fund, right? Pretty small bank failure. But if we see some bigger bank failures, I don't know if the FDIC Deposit Insurance Fund of around 100 billion is going to be able to insure the trillions of dollars worth of deposits for everyone, right? This is a very small fund, and it really isn't meant to handle a systemic banking crisis. Now, as I mentioned, a lot of these banks have all made bad investments. The primary bad investment that they've made recently was in 2020 and 2021 when we got all these new treasury bonds issued yielding around 1%, and the banks bought them all. And now the banks are stuck with these treasury bonds that are yielding 1%, while the current treasury bond yields are up between 4 and 6%. And nobody wants to buy their shitty bonds, right? They would rather have the newer bonds that are yielding more. So the banks are in a pickle because they can't get these treasury bonds off their balance sheet. And that's where all their liquidity is tied up in. You also think about some of the loans that banks have made over the past couple of decades. We're seeing the values of commercial real estate properties significantly decline. And we've already seen some commercial real estate developers and commercial real estate investors, some other players in that space default on their loans or declare bankruptcy. And when that happens, banks take losses. And I think we're going to see more losses for the banks with these commercial real estate loans that they loaned out over the years. And you also just think about other types of loans that they've made, right? We're seeing a ton of layoffs right now, and people who took out loans to pay for college or to pay for their house or a car or something else, maybe they can't pay off those loans if they're not working, right? So I definitely think we're going to see the banks take more losses, and it could be a rough year for the banks. I wouldn't be surprised if we see some more bank failures. And the more banks fail, the more trust is lost in the system. And I really think the system is fundamentally flawed, right? The foundation is fundamentally flawed because when customers like you and I go to the bank, we're not looking for an institution to gamble with our money or go invest our money. We're looking for an entity that can store our money and protect it, right? We're looking for storage and protection. And there's a big disconnect there. And I think customers have started to realize over the past couple of years that that's not really what happens in the banking system. When you deposit your money at the bank, they take that money and they buy treasury bonds, they buy other assets, and they loan that money out to try to make a profit. But the problem is when they make bad investments and they take big losses and they don't have the money to get back to the depositors. I think how the banking system really should be is, since what I want as a customer is for you to protect and store my money, I hold my money with you at the bank and you take a fee, whether that's 1%, 2%, 3%, 5%. Maybe people are willing to pay more for better protection, but that's how it should be, in my opinion. This should be more of a service rather than a business. Now, if people want to keep their money with a bank and, let the bank invest that money however they want and they get paid higher interest for doing that, that's fine. That can be its own separate thing, but we should definitely have the option for a full reserve banking system. It's kind of ridiculous that when you deposit your money, the bank can take 90% of that money and make investments with it, right? I want you to have my money at the bank. So when I come there and I need to buy some new shoes, whatever, I can get that money back. I want to wrap up this video by mentioning there is one full reserve bank out there, which is Custodia Bank. There might be more, but the only one that I know of is Custodia Bank. And Caitlin Long, who is a person who is in the Bitcoin space and the digital asset space, is the CEO and president of that bank. And she fought to get this bank an account with the Federal Reserve and to get this bank approved for customers. I believe it is based in Wyoming. But I think this would be great if we had more full reserve banks so that people know their assets are actually at the bank. I think that's what people want. And I hope as we move into the future and things change that we have institutions that can protect your money and assets. We will see if there's more bank failures this year. I've made a couple videos about the banking system in the past. Like I said, I think they are all dealing with some of the same issues. So I would definitely be paying attention to the federal funds rate, right? If they raise the federal funds rate higher, that puts more pressure on the banks. And I'd also be paying attention to things like the value of commercial real estate or certain real estate markets, and also just things like bankruptcies, the unemployment that we're seeing. That's what you want to pay attention to, because when that information can help you figure out when the banks are taking losses and where the banks could potentially take losses. That wraps it up for this video. Republic First Bank is no more. Has failed with its brother First Republic Bank. If you are interested in getting exposure to Bitcoin, check out my Swan Bitcoin link in the description. If you use it today, you can get $10 off your first Bitcoin purchase. Not a bad deal. Check it out. It's down there. If you didn't like the video, please make sure to do that now. If you haven't subscribed, please subscribe. I appreciate it. And thanks for watching. I'll be back soon.